This is Justin Pulitzer. This is my weekend review video for September 18th, 2016. A lot to cover. Let's just do it. All right, so this week was a bit of a holding pattern week after the technical breakdown last week in the S&P. NASDAQ's a bit of a different story. We're going to get to that eventually, but the big show is going to be on Wednesday when we get the September Fed meeting. This is the big one, sort of. I think this is going to be what determines where interest rates are going to go for the balance of the year. And there's a few things I want to discuss. Let's just lead off with the Fed. I usually go through the 7 market keys and then kind of parlay into the Fed. But since the Fed is so important, I was actually going to hold off on this and do a Periscope this week. But I think I'm going to cover it now and then do a Periscope, which is a follow-up, which will be the results. So a quick summary of the data. The inflation is still below 2%. We know from, I think, two or three pressers ago, I guess 3, including this one, so 2 ago, the not including this coming one, the Fed talked about allowing symmetry in inflation, which I took as them tolerating more than 2% inflation to kind of make up for the time that they've been below 2%. We have yet to achieve that. The jobs have been rather stagnant. There have been some momentary blips up, although wage growth isn't that great. There has been some improvement on the margin, but nothing amazing. The there's been a bit of a change. I mean, there's a big move to part-timing. A lot of that is to avoid the Obamacare tax. And if you look at some of the average hourly work week, it shrank. And if you factor that in, that's like a huge amount of jobs lost. I mean, a back-of-the-envelope calculation, I had done it at the time. I don't, unfortunately, have those notes in front of me, but it was like something like 250,000 jobs. So the Fed has miles to go before they sleep in that department. They talk about a lack of business investment, and a lot of that, I believe, is due to, and mentioned as the lack of certainty with regulations and so on and so forth. In the last minutes, they talked about GDP, inflation, and foreign risks all being to the downside. So it seems very unlikely. Plus, we've also had a multitude of data, really weak ISMs, really weak PMIs, Empire States, Philly Feds. Nothing there has been great, and all of the kind of the deep dive behind those numbers have been to the downside. However, it has been proposed by many on TV that the Fed may go anyway. My theory on that is that they will not go in September. The probability, based on the CME website, I think is something like 15%. That may or may not get some kind of a pop right before the event, but it seems to me that they will not be going in September. If they do and they shock the market, we are going to get a very large move down because the market isn't prepared for that. I've proposed in past videos that the Fed has been wrong on their growth projections. We've had a very weak first half of the year. They're kind of looking for the gambler's fallacy here to kind of double up to catch up, and a raise in interest rates would most certainly make that impossible. So it seems highly unlikely to me that the Fed is looking to raise rates. And as we've known from the last few years, we've had very weak first quarters of the year. So if the Fed is going to hike into a slowdown, that may make the slowdown even worse and thus hurting their growth projections. It would be a bit of a circular reference, if you would. The key, though, to this meeting, and remember I've talked about this before, the Fed isn't going to go from dovish to hawkish. They are going to flip to neutral first. So the big question here is going to be is if the Fed either stays dovish or if they flip that switch back to the neutral position, thus setting up a December rate hike. We will not know that until we hear the language of the press conference and the minutes. I think the Fed will do their best if they are going to raise rates to openly telegraph it with a kind of a tap on the shoulder, if you will. So if they are ambiguous and they don't hike, I believe that they will not in December. If they are more clear and they kind of say, hey, we're going to raise rates in December, the jubilance over no September hike will be either short-lived or non-existent, and there will be trouble because now all we'll do is obsess that the Fed is raising rates, and they may want to discount that soon. Based on the data, the Fed has no business hiking at all this year, and they should, in fact, be easing more. That's a whole other conversation. What they should do and what they will do, we just got an alert that the ES is over a target here. Anyway, so that's the take. If we do get a rally and the Fed doesn't switch to neutral and they stay dovish, it will be one that will likely stick. If they do switch and there's a rally, it will be one to be sold. And if they switch and we get a sell-off, it'll probably have legs. So we have to see if they kind of flip the switch. Those of you who are fans of Over the Top, an old Stallone movie, we got to see if they flip that switch, move the head, the hat to the back position, so to speak. All right, so that's what we're going to be looking after. I will be giving commentary on that. I know a lot of people aren't as familiar and versed with Fed speak, so it will be on me to tell you if they flip the switch or not, and I will be happy to do that, and I will clarify that in a Periscope video on Wednesday. Anyway, let's jump right into it. The pattern we're in here is starting to look a little bit like this pattern. We got to kind of this downtrend. There were two downtrends I drew in. This one stopped basically right on the backside of the potential change in volatility channels, and we have backed off substantially. We're still above the 100 MA and above this sort of low. So I guess there's always the possibility, I shouldn't say probability, but possibility of a pop-up in IV. It seems to me that there's not going to be too much of a back off ahead of the Fed. If there is, it starts getting a little bit dangerous. I'm expecting volatility to kind of hang out and maybe have some more, moves up or whatever. See here, we kind of popped up, came back down, popped up. I'm expecting this kind of action. So we'll see how that plays out. Anything below, however, 1785 to 1757 ain't no thing, as they say. So, there's not that much to fear there except fear itself. If we start getting above this spike high here, which was 2051, then I think we're going to probably see 24s and probably 25s. So that's my take on volatility. I think it's going to be this kind of chop back and forth of the head of the Fed, and they're probably not going to let it go until after that. The dollar. As the dollar rises, this is kind of like a de facto tightening. So the Fed is aware of this. They don't want a strong dollar. It will further derail their growth projections. They may jawbone and talk, but the truth is they don't really want that. I talked about potential head and shoulders action here. We're not at the top of a range, so it's not as important mid-range, but it is noteworthy. Starting to make some higher lows. We haven't made some higher highs yet. The 200 MA here, moves above it have been not so sustainable. I'm keeping my eye on that and the trend. If we get above this high, 25.23, which we see here to the tick, look at this high here. You could look now. It was to the tick. If we get through that, then I think we are in for a bit of a tussle. That means I think the dollar could want to retest some of these highs. That will not go over well in S&P land. So as long as we're below this kind of shoulder, the trend, it's like okay. If we get above the head and shoulders, then we are going to go higher in the dollar, and that will not be good for the S&P in my humble opinion. The bonds. They have done exactly what I've been looking for them to do. We are now in oversold territory, which is good coming into the Fed. You kind of want that a little bit. We are in a up channel within an up channel, if that makes sense. We looked a little bit above, came back down. We broke the range lower and got our 60. Let me zoom in here. We're kind of a little far. I think that gets a little... Anyway, we came down here to the measured move. We broke out of this kind of channel, got the 61.8, a minor bounce. Here, we had a look below and fail, and now we're back up. So I think you can use this range here, this look below and fail candle, as the guide. Anything above 34.05, which is the high of that, I guess you can consider playing long for the gap fill up here. Anything below there, I'm thinking channel low and probably closer to the 130s, which is the edge of this larger volume distribution where I think there will be muscle memory, and this would be a good right or right out area to buy, and it'll be kind of roughly, it'll be a little bit below the 200 MA, but sometimes you do get a quick punch through, and so I'm thinking that. If you want to be more conservative, I like this bar, these big emotion bars, and the platform is frozen, so while we're up, there we go. Anything above 136 here, I think is a play for the gap fill. Back maybe to even as high as the, even maybe 138.5. Anything below this low, and this look below and fail again, I think is the play for here, and I would like that with either put ratios or put spreads. Keep in mind, this is still rather elevated of a level, and as long as rates don't kind of bonds don't collapse and rates don't really shoot up, then I think that the PE multiple premium game is still in effect. So until we really break out of this channel to the downside, I'm thinking the lower for longer thesis is intact. If this starts breaking, particularly on a Fed move, that could signal also that, a rate hike may be in play. I have said for a while I think December is still on the table, even though it should not be on the table. HYG not doing all that much. It is below this sort of informal regression line that I've drawn in. It's below this trend line that I've drawn in. We are still, however, above the old downtrend. The 200 MA was quite important for it. It couldn't get back over it for a while. Here was a successful test. We haven't had a test in a while. I don't necessarily know that we're going to automatically, but I will say this. We're on the wrong side of the 50 here. If you can get back up above 1, 2, 3, 4, 5-day highs, I think the play is back to the upside. Below there, to me, remains a little bit vulnerable to at least the 100 MA and the backside of the old downtrend test, where I think would be okay for kind of a right or right out day trade. If that were to fail, then I will be targeting a 200 MA. Again, will not go down so well in stock market land. Oil, there's a lot of hullabaloo. Trying to come up with some interesting phrases to say here. It looks like we're in a bit of a gentle channel. The chart is jerking because it's actually trading. We are still above the trend, and I have said for a while this is the pass, don't pass line, 42.49. I like that the 200 MA is catching up. You can see, look, it was resistance here, basically here, and then once we got through, we had a bit of a look below here and fell. So 200 MA is really the big demarcation line. If we were to get back through there, I think we're going to see the channel low. We'd probably revisit this 50% fib easily, and maybe even the 61.8 down in 35s. I'm going to say that I think oil is still bullish, though, even though it's a little bit below the 50 MA. As long as it holds 24.49, it's quote-unquote okay. If it loses that and this last swing low, it's going to have problems. Again, the market will not like that. These are the key levels. XLE, begrudgingly pulling back. We're a bit below the 100 MA. I've been waiting for a 200 MA test for a while. We have yet to get one. I don't know that we will. I don't know that we won't. But below the 100 and below the 50, to me, is a little bit more vulnerable. This is really correcting, though, more by time than by price. I mean, it is down off the highs, obviously, a few points, but kind of going begrudgingly, which tells me that there's a bit of a bid for oil and oil stocks. My favorite of which is the Mac Daddy of all oil stocks, the Exxon Mobil. I talked about getting profit taking up here, and we came down. This was the earnings gap. It had found some buyers. Now it is, I guess, below the range. My big areas here are somewhere between this 83 and 81-ish level. I put this oval here just because the earnings here, my guess is it would probably come down sooner. Let me move that. I don't like where that's drawn. I think I did that just because it was basically where the earnings were, and a trend and a 61.8 confluence. But let's say we get down there maybe this week, I'd be a buyer. Two places I'd be interested in buying. A little further weakness into 83s and 81s. I'm interested in selling some out of the money puts. If we were to get back up over the 200 MA, and you could see here you had basically three failures of it. These two couldn't kind of hold above it, and this one touched and failed. If we get back up above these 3 days high of 85, 83, I think this would be a false breakdown, and the play would be back to the upside for an upper channel test. So I either want to be long over these 3-day highs or start selling some puts or getting long into 83s and closer to 81s. But I like that. It's doing what we were looking for. When I say we, I usually mean me. BABA, we're not up to BABA yet. See how excited I am about China? I just can't wait to get to BABA. Starting to roll over a little bit here in the stochastics, below the trend within the up channel. What can I say here? As long as we're kind of above this, like these 36s, it's like quote unquote okay. I like it more above 37.66. We kind of just closed there, 37.73. 50 MA, we'll say that. If we can kind of hold that on any pullbacks, I'm kind of like okay. This could still grind higher, or maybe if we start losing these lows, this kind of weak in trade and a 50, maybe we get a channel low test. So this is the kind of the demarcation line. Anything below 37.66 gets a little bit more vulnerable, and if we lose this swing low of 36.91 and the 50 MA, then it's probably going to come to channel low. So let's see how that plays out. On the whole, though, China looks like it's trying to kind of right the ship, a big rounded bottom, if you will. So I'm kind of looking to buy pullbacks in China, not really short the rallies. The BABA. All right, so I did this very elaborate a couple of videos ago, measured moves. This one I clocked in at 37.19. This one 29.22. This one 26.64. And I projected some potential upside targets in the 99s, the 102s, 110.49. I took a geometric mean of roughly 104s, and it's been kind of fumbling around there. It struggled here the first time, pulled back, and now up into here. I like booking some profits here, but I do think that if this kind of holds firm over this up candle, I'm sorry that let me see if I could pull this back. No, I can't. When I drew these in, we were not quite there yet. If we could, as long as we stay over 104.30, I think 110 half-ish is in play. If we get back below there, we could get back to even the 100 or maybe even the 98s level. The first and foremost important level to me was the 98.35. Roughly between 98.35 and 99, I think is important. We are at one of the 1.618 Fibonacci extensions, so I like taking profits here given the fact that we came up from the bottom between 104s and 110s. I took some off. I still have a little bit of long on, but I took a bit off. IBB looking a lot better. Yeah, I said that coming down here from the top was not likely to break down. I also said the rally up here was a little suspect just because we came up from the bottom. We've spent some time correcting, which is okay. As long as we're above 289.71 and holding roughly the 200 MA, it's kind of okay. There's a little bit we had basically a double top here. You really need to get through this double top to get up to this 215.55. 315.55. I do think we're going to probably get there, but there is going to be a lot of muscle memory between there. So it might be a bit choppy. That's my take. So as long as we're kind of above these lows here, though, this 288.01 to 289.71, it's okay. We have a 50 MA here, so I like it long as the 50 MA holds. Let's keep it like that. And I would say that 200 MA or slightly below are right out levels, but this was like a bit of a look below and fail, and we're cleared that bar. So Yeah, these 287s, 288s, 289s held. I like it long. If we start getting back below there, it gets a little bit more iffy. There's a bit of a turn going in like ALKS. I talked about this one that I've been looking really for it to get back up to 60.25. Struggled at the 200, couldn't hold the 200. And now we're back above it. We're kind of struggling at the old up channel. So this is either really a right or right out short, or will continue long higher, depending on your world view here. If you want to try right or right out short, you could do it with a quick stop over 50.20. And then the add, of course, would be below the low, below 47.78. But I'm sort of again more in the buy the dips camp. I think I'm short 39 puts in there, so those are wearing down nicely. Longer term, I like ALKS, but I want to see how this handles the channel. Right now, it was a bit of a look in and fail. I wouldn't say that there's really that much to do in this other than my position that I am in. They're going to have earnings. If this is down ahead of the earnings, I'll be kind of looking to play long. If this were to rally up into here, again, looking more to take profits. This Gilead is just not doing anything. Just kind of marking time on the bottom. A little look belows and fails. Consolidation. I'm really hoping for a larger breakdown down to like this 69-ish. Maybe even a little bit below. You can see there's a reference low down here. This is annoying. Where is that? 63s maybe. Look, this has come down a hell of a lot. I've been looking more for a long entry, so I'm either looking to buy it over the trend line, a break of the trend for a move back up, maybe even as much to fill the gap, but at least to maybe test the low of it. But I'm either waiting for a trend break for the move to the upside or kind of like a final flush to sell puts into down into there. So those are the two ways I want to play it, either on momentum strength to the upside or on the flush to the downside. S&P. All right, so the stochastics are rolling over a bit. We're not below the low, so there technically is a little bit of time. I think SPY went X. That's why we're back down to this like area. These are kind of poor lows, and you have 100 MA here. This was the old high here. I've been talking about this channel low being the potential if we were to have a further breakdown, maybe on the Fed or whatever. It's also a 50% move. If you take the Brexit move and move it down from here, it would be roughly like 205s, basically a 200 MA test. So that's sort of like, I guess, the max pain that I'm looking for if we were to fall out of bed on a Fed move, although you never know. Moves can sometimes take on lives of their own. Anyway, we are kind of confined in this range. The lows are getting a little bit poor. I feel like more and more people are kind of pressing the shorts here. Like, a lot of people are bearish in the market. I've seen some surveys. It's almost like 50-50, which I guess is good for the bulls as long as people hate the market. Anyway, I like it long versus the 100 MA. Below the 100 MA would be a stop and a right or right out short from here on out. The problem for me with the short, though, is, like I said, you have a reference level here, you have a reference here. This gap fill is close enough for me for government work to like 210. These were big points of contention. You could see all this volume here. I think there's a lot of muscle memory, and it would be like $10 off the high from the move. So it seems to me like there could be the downside might be not so ginormous until you really lose. Like you can see here, this old support I kind of have driven in here. This is sort of like almost like a range demarcation point. Until you lose those and like the 200 MA, I don't know that you're going to get like a ton of panic. You can see Brexit here spent a day below, and then it was like kind of back to the upside. There have been like a lot of liquidation breaks, and I think lower, oddly, into the Fed would be healthier. We might just get sideways chop, but I think a break of the range and like a move to the channel low would be a better setup. I think the Fed is going to be a go with. I love to play against Fed day ranges, so I'm not really going to be doing a ton of trading ahead of the Fed. Kind of babysitting positions, and then I'll play either long over the Fed day high or short below the Fed day low, and if we're in the range, then it's sort of like a no touch. So I'll do a bit of a more of an update on the on the Fed day on that Wednesday. Anyway, like I said, we have a 61.8 and roughly a Brexit move around 206s. So if there was a move down kind of like between this like 209 to 206s, I'm interested in a right or right out long or to sell near dated out of the money puts just because we've come down so far so fast. So that's what I'm thinking. If we were to now, after this kind of correction, to get back up above, let's say, this like high, the 50 MA, then I think we're going to re-challenge all-time highs. I'm not as bearish as most for a couple of reasons. One is that IWM held the old high. We had a bit of a look below and fail, and it's kind of just hanging out there. And the channel low would take you basically down to the 117.37. That's been an important level for me ever since I could remember. Back into this time here, back in January of like 14. So yeah, I think that the 100 MA there, like if there were a move down here, this would be a good right or right out play. So like if you lose this low, I think you could do a quickie short. The low here was 119.88. A break there, I think you can get a quick move down to the 100 MA. But as long as we're kind of above the 120.58, I'm like okay with still being long. The fly in the ointment for the bears is the NASDAQ. Huge relative strength. This has already filled the gap and is almost like retesting the highs. Kind of a bullish pattern, right? You have this big move up. You have this little bullish harami inside that held the 10-day moving average. So for a quickie, and we're above the old high, the 115.75. So, and you have a 50 MA right there. So this is going to be a hard pattern to really break down out of. Obviously, a lot of this has been thanks to Apple and Amazon. So if you want like a quickie trade, above this kind of high here was 117.41. I like for a right or right out long. Below the low, 116.78. I like for a quick right or right out short for a 50 MA touch. Speak of the devil, and they shall appear. Apple is doing God's work, as they say, for the NASDAQ anyway. Got right to the gap fill, pulled back, basically got the channel low, 50, 200 MA, test, whatever. Big engulfing pattern here, gap and go. We're at the channel high. I like taking some profits. I think 119.75, where this kind of channel ends here. This is some reference, old support, could be some resistance. Keep in mind we're coming up from the bottom. I think 119s would be between 115s and 119s is a good place to kind of let some of the long out if you've been long for a while, and then play for pullbacks. This area here now, these 109s, 110s should be support. The ideal scenario would be for this to kind of drift down here and then set up, for the earnings for, a move up. We know that Apple has already, we know the phone has sold well. We know that Samsung has had problems with their phone. They're exploding. I said, if you're wondering why Apple's rallying, if you're a parent, would you rather buy your kids the phone that's blowing up and can't be taken on planes, or the one that, is now going to be playing Super Mario? I think it's a pretty no-brainer. So yeah, I'd like a little either pullback by time where Apple kind of chops sideways, or some kind of shake and bake where it comes down and plays for a move back to the upside. But yeah, I was a big bull on Apple the last week or so, but I'm looking to book some profits into these 115s and 119s. When Apple gets bullish, it can take on a life of its own, but I do have to stand by some of my discipline. Microsoft. For a while now, I've said I think this has a date with destiny, up basically near $60, $59.97, which is the old .com bubble high. amazingly I was trading back then. 56.85, we're above it. 50 MA. I like long as long as it's above there in the 50 MA. Below, it's maybe a little less iffy. I mean, a little more iffy. If we break the 55, 53 now, this low was 55.61. So if we break that 55, 53, 55, 61, I like playing short for a gap fill. So long as we're above the 56.85 and 50 MA, and then I'd be more short below here. So that's my story. I'm sticking to it. Facebook, I had said I thought was going to re-see those highs that it saw in after hours close to the 132s. We basically got there. Again, the progression line did its work. We backed off. Just grinding and chopping. I'd actually prefer this if it's sold off ahead of the earnings to somewhere down into like the 117s, 120s. I don't know if we're going to get so lucky because they've been just kind of crushing it. I think a lot of the advertising is going to them on Instagram and on Facebook. You know, the original move was from print to online, which went from newspapers to Google, and now it's going from online to social, which is Google to Facebook. So I think this stock is destined to go a lot higher. I love buying it on pullbacks and corrections or whatever. But if this does, of course, rally into the quarter, I'm going to like it less than I'm going to like it if it pulls back. So I would love a shake and bake, God willing. I talked about booking some profits up here. It's pulled back since. Yeah, I mean, as long as it holds like the 50 and the 100, I mean, I think it's kind of okay. 200 moves to the 200 have been viable. I think the 200 is kind of just catching up. Remember this, the gap fill down here, touch of trend. I talked about it being a buy, actually right that the day. Wow, was that prescient? I'm praying with fingers crossed that this does something like pull back, shake out all the kind of tag-alongs, get into some reference areas, and the trend line, maybe one of these reference fibs, and like here's the 50% fib, and set up again for the long. So I think this could grind higher, but I think it's going to be the harder play to make money on, as opposed to if it had the pullback ahead of time. So yeah, it's a little bit of a long-winded way of saying that I'm hoping for the pullback. Amazon spent a lot of time. Let's just zoom in here. Spent a lot of time consolidating down here on the 50 MA. So we had a bit of a gap up here. So yeah, I think that as long as you're above these 1, 2, 3, 4 days, the high here was 772.66. It's kind of like okay long. If you were to get back below there, it to me is just going to be choppy. Again, this is one that I've been praying get some kind of a large pullback. The probability, in my view, though, is it's likely going to see this 833.91. That's the 1.618 fib extension, I believe, of this entire range here. So it seems like it's kind of bowling for that. 50 MA is held, so as long as the 50 MA holds, I think it's kind of okay long. If you were to lose these, like if this was like up and then you had like a big bar down, let's say like Monday or Tuesday, and you took out these lows, then I would actually like it for a right or right out short for a 100 MA test. So as long as it holds the 50, I like flat to bullish. Below there, I like it short for a move to the hundo. 100 MA, that is. Netflix really not doing very much. This to me has been a little bit dead money for a while. It did break the downtrend, but it's kind of just doing it more by time than by price. 200 MA was unsustainable here, resistance here. It's been resistance here. Friday, you had a slight close over it. So I'm going to say this. North of the 200 MA, okay long. Below, it's just a non-starter for me. Above the 200 MA, I think you could maybe get even as high as 108s. Below there is just, going to be more of this chop and nonsense. Google. Consolidating nicely, working off some of this move. Look, we moved from the low to the high, and it's just consolidating. I think eventually, I I just had drawn this in a little arbitrarily. This might take till their earnings. I think eventually we're going to the channel high. So I could be wrong. We could always get the gap fill first. But I don't need to guess. I'll keep it like simple like this. This day here is a pivotal day. If we're above the high there, which is 817, I like long. Below the low, 783.50, which is kind of roughly in line now with the 50 MA. So 50 MA in this is the must-hold support. As long as that holds, I'm okay long. If it breaks, then I think we could get the, I don't know if you're going to get a really huge collapse, but, maybe you get a bit of a gap fill. Maybe even a move to the 50% fib, which would be kind of in line with the, I guess, the 200 and the 100 MA, where I'd be interested in, or the backside of kind of this old downtrend. It's kind of an unofficial regression line, where I'd be interested in either covering the short from here, or maybe even reversing and going long, or just going long if you're not already in the trade. So yeah, this bar's range here to me that's the bar from 912. That range above the high, I like long. Below the low, I like a little bit more to the short side. Tesla. Didn't quite get the full test back here, but bending back up. It broke the channel. It broke the 200 MA. I think we're headed for a 200 MA retest, where I think you can, and that's a confluence of a lot of moving averages of 50 and 100. I think somewhere in here will be okayed for a right or right out test, for at least for a right or right out short. If it can reclaim the 200, it's key. I disavowed all knowledge of Tesla long once it broke the 200 MA. I think that the shorts are just waiting because they're going to have to reissue some equity, and until that happens, I think the stock's upside will be limited because of this crappy Solar City deal. You can see there was some support here. We're basically back up to it, but I'm looking for a right or right out short based on the 200 and this like 50 MA, 100 MA confluence. So that is my thinking. I don't think that there's a huge amount of downside left in this stock. This would be more for like an intraday day trade. I never really love to be short Tesla because it's a poorly distributed stock with high consolidated insider ownership, and it's heavily shorted. That's not a good recipe for stocks you want to be short. And Elon Musk can do a lot to hurt shorts. But I think the upside is going to be limited until they do that either equity or debt offering, and my guess is it'll be equity. Chipotle, there's really nothing to see here. This thing is just kind of what's going on here? There we go. Stalling in range. This needs to clear the 100 MA. It was resistance here, resistance here, resistance here, resistance here. A gap through it, but quickly came back below it. This day here, I like it either for a, you got to get back over the 100 MA. If it's back, I like this stock either short below the 100 MA or long above the 100 MA. I'm going to keep it that simple. Yeah. Price line. So before I get to price line, Expedia there's a lot of divergence here. Like Priceline is almost at all-time highs, and Expedia dumped pretty handily on Friday. It's still in a channel. I like it long against this channel low for a right or right out trade. Roughly, if it were to happen Monday, it probably won't, would be 100, 101. I'd probably be interested in a quickie for at least a quick bounce. If that were to fail, of course, we could fill up the triangle, the 96s, and maybe even 88s. But I actually think Expedia is a better company than Priceline. It's the one I kind of use. But 200 MA here, moves above it have not been sustainable. Anything below the 200 is at least, in my view, a right or right out short. Back above, to me, would firm. I think that this is going to probably take earnings to resolve. But in the meantime, this Priceline is looking rather solid. It's filled the gap here. Let me zoom in a little more. I want to just warn that this has come up from the bottom. You came up here, had a pullback to channel here, and now we're riding up. I do think that this could see the channel high at some point, but it seems to me like there'll be some responsive sellers probably here, or maybe they'll probably run it just to run the short, the stops. But I think that this looks like it's going to want to retest the highs and maybe a little bit even higher, and probably will have a little bit of a squeeze ahead of their number. Considering this was up the last time and now you're above that earnings high, my view is it'll squeeze. So as long as we're above, I mean, look at this. You had this big move up, inside kind of doji that held strong. So let's use this range. Anything above 1462.91, I like long. Below this low, I like for a quick right or right out short, which is 1442.22. So yeah, let's use that little harami as our gauge. Above long, below we could do a quick short, but I do think that this is likely going to get to the at some point at least see the channel high. I'll leave it on one I don't cover very often. ULTA. This is a interesting right or right out setup. We got to the high, we came back down. Often, once you've come down, the gap here, you get to the gap low and everyone gets nervous, but instead of filling the gap, you get a rally. So I'll keep it like this. If you can hold 228.53, I like it as a bit of a right or right out long, just for like a bounce back up into range, maybe to a lower high, and then there would be, to me, more danger of rolling over. But look at this. This kind of just rolled over down. It seems unlikely to me that a stock that came from an all-time high isn't going to have some muscle memory bounce. So I think that this could be maybe a false breakdown. Obviously, the ideal scenario would be for this to just completely go and fill the gap coming down from that high and then set up for like a long right at the 200 MA. It rarely happens like that in my view. I think that this is likely going to have some kind of a responsive buy here. I'm not even talking because it's on the 38.2, but I'm using this low. I've seen this kind of performance play out before. We're below the stochastics. It's way oversold and it's already starting to bend back up. I think you can play against these even this reference low if you want to play really close to the vest. 230.10. Anything above these 2-day highs, I think, could at least see the 100, maybe even the 50 MA. So that's what I'm thinking. A quick bounce in ULTA, but I want to play that quickly. I think this will at least rally to something of a lower high. And then, then it may be more vulnerable to a gap fill. I don't know, but below the channel, obviously vulnerable. But I think these reference areas will be key. I want to go into some of the bigger stocks that are getting a lot of press. This Bristol Myers is coming into some reference areas in the 54s and like 51s. I've started selling some out of the money puts there. Look, I mean, this came down basically from an all-time high. You're below these reference lows. It's just been down, very minor bounce, down again, consolidation. I think somewhere in here is likely. I mean, listen, if this completely falls apart, I mean, you could probably see 44s. I've seen crazier things happen on Wall Street, but I like the idea of kind of nibbling into here. You're way oversold. This thing has just been killed, and it's been in a straight line. So I like the idea of kind of starting to leg into this area. Deere did what this pullback was a little bit larger than I think a lot of people thought. I liked it. I think I tweeted it out. I don't remember, but the 200 MA. I was talking about it with my buddy Brad, actually, and I were chatting about it. This has a downtrend line here, so I think over the downtrend line would be the add, and I think that this could. They really killed it on their quarter. I think that this could even retest these highs again. I don't think that this is going to just roll over and fill the gap. Listen, it's possible, but I like it. As long as the 200 MA holds here, you could see moves below have not been sustainable. This was resistance. This was a gap and go over the 200. I often talk about where the gap comes from, which moving average. Once that moving average is either, like if it was a gap down, the 200 would be resistance, but this was a gap up, so I think the 200 should be support. So I kind of like this as long as the 200 holds. If it loses these lows in the 200, then I think the gap fill and the trend is in play. But I like this as long as the kind of the 200 holds. McDonald's just cannot get out of its own way. This pattern is just disgusting. I did say that I thought we'd see a bounce, and I kind of talked about this being a skedaddle here to sell close to 120. It couldn't even get quote to the 50. I'm really hoping that this does something ahead of the earnings like dump, because I think it will be a buy for the earnings. I was waiting for a 112 area for a longer term type of a play. Still might get it. This thing really needs to hold 115s. If it loses these lows here, I think you'll see the 112s and maybe even the 109s. That was the 50% fib. There's also, a gap fill down to 102s. I'll tell you, it is so possible that could happen on a crappy quarter. It's scary. But I don't think that this is, after all of this selling here and there's like a little bit of a rally, I think a move down into these 109s, and I'll be interested in starting some positions via short out of the money puts just for a bounce. Disney, same kind of bullshit. BS. This thing is just awful chart. But this has come down now so many days. At some point the sellers exhaust. Look what happened here. They killed Disney, and then on earnings it just kind of rallied back up. Here it kind of came down again. And here was a bit of a pop which failed, and now you're coming down. I'm looking for something like this. I like Disney versus this kind of like 91 area, 90-ish, 91. I think it could be a long. If you could get over these 2-day highs here, which is like 92.74, 92.75, then I think there could be a play for the channel high up to 95. So I like it over the 2-day high for a buy stop for a move up. Or if this, comes down further, the ideal scenario really would be for this to really get itself ahead of its, ahead of its skis with a ton of sellers into this like sort of 86 area, and then set up for a right out long for earnings. This is amazing. You see stocks like Apple rallying, and then like big stocks like McDonald's and Disney just holding the averages down. Look at this 50 MA here. Has been so much resistance, so I think the 50 MA would be a good spot to either play if they get over the 2-day high for a play long to the 50 MA and the downtrend, and then maybe flip for a right out short. All right, I think I'm going to end it there a little bit earlier. I don't like to go too long in these videos. If you're not following me on Twitter, my handle is @JustinPulitzer. If you like this video, hit the thumbs up. Please leave me some comments. Your comments help me make this better. Be sure to subscribe to my channel, and then there's a little area where you can click a plus and get notifications when I post new videos so you can see them right away. I highly advise doing that. Anyhow, that's my story. I'm sticking to it. I will be doing Periscope for an in-depth deep dive on the Fed. That's going to be real on Wednesday. Anyhow, that's my story. I'm sticking to it, and cheers.